CCC is really proud of 2016 second quarter and first half results. We managed to deliver significant increase in terms of revenue, gross profit on sale, gross profit and net profit. Over the last 6 months, revenue increased by 35%, gross profit on sale margin increased by 35% as well. The same applies to gross profit, the pre-tax profit. So in my opinion, it was really a fantastic period for CCC. CCC for many years has been a market leader in footwear market in Poland, with the market share of 20%. We thought, however, that in the foreseeable future, it was not possible to increase our market share beyond 25%. For a couple of reasons. The first reason is that we sell only private labels in our stores. The second reason is that we deal only with customers with mid or low income, disposable income, selling mid-priced economy segment products. So we came to the conclusion that in order to increase the market share of CCC in Poland, we have to address our offer to a different customer group and a different distribution channel. This is why we acquired eobuwie.pl, you may call it efootwear.eu, the guys who used to run the largest online footwear store in Poland. It was a very good move because eobuwie.pl is a company that specializes in selling international, well-known footwear brands like Geox, Eko, Nike, Adidas, etc. Some 400 different brands. With their support and with their presence in our capital group, I think we may easily exceed 25% market share in Poland and reach maybe even 30, 33 in the foreseeable future. I mean the next 3 to 5 years. There are currently more than 800 CCC stores in 15 countries. But for many years, we've been dealing only with Polish market, with the domestic market. Until the end of 2011, 95% of the business came from Poland, remaining 5% from Czech Republic. So for many shareholders, for many investors, it's a really surprise when they think about CCC as a pan-European company. It was, I think, early 2012 when the management board of CCC decided to start geographic expansion. At first, we decided to open some pilotage stores. Some kind of a business test was developed. And once we experienced how well our brand is perceived in each and every Central and Eastern European country, well, we announced in August 2012 a very strong geographic expansion strategy. After 4 years of this geographic expansion strategy, I'm proud to announce that currently more than 45% of the revenue comes from Central and Eastern Europe, while remaining 55% is our domestic market. All Central and Eastern European countries are highly profitable for CCC. Doesn't matter if we talk about Poland, Czech Republic, Slovakia, Hungary, Slovenia, Croatia, Bulgaria or Romania. All of them in the very first year of operations managed to deliver nice profits. A different story applies to Germany and Austria. Those two markets are highly competitive and CCC is still not profitable in those markets. However, we think, and this is one of our key strategic objectives, we think that within the next 2 years, both countries will turn into profit. In terms of risk, I think it's worth mentioning that all of CEE countries, in management board opinion, deliver no significant risk for our business profile and business model. Why? Because disposable income, cost structure, culture is similar. Doesn't matter if we talk about Poland, Czech Republic, Slovakia and Hungary. We are living in Central and Eastern Europe, and the business patterns for all these countries are very similar. Over the last 5 years, CCC managed to open its stores in 4 geographic regions. It was Central Europe, Western Europe, East of Europe, and Turkey. And many investors, many our shareholders were concerned where CCC would grow in the coming years. And the answer came, I think it was early 2015, when we delivered very clear message, very clear statement that there are 2 strategic directions of further expansion: Central and Eastern Europe and Western Europe. In 2015, neither Russia, Ukraine, nor Turkey were of strategic importance for our company. By the end of 2017, I think 90% of our efforts, energy, and investments, of course, will be allocated in Central and Eastern Europe, and to some extent in Germany and Austria as well. We got a lot of questions about our strategy. Why you guys invest so much money in bricks and mortar stores? At the same time, e-commerce is growing rapidly, even in your country and even in Central and Eastern Europe. Does it make any sense? Those are these questions. And our answer is as follows. We managed to build a huge company based on bricks and mortar stores. The distribution network comprises of more than 800 stores, physical stores. But these stores are dedicated to provide customers with low disposable income, best quality to price ratio. There are, however, many other different groups of customers, even in Central Europe. Those who love brands, those who can spend 1,000 Polish zloty, which is 250 euro, for a pair of summer sandals. For those guys, we have an offer in our e-commerce online store, which is called eobuwie.pl. So please consider CCC as a company with offer for traditional bricks and mortar customers and online more sophisticated, wealthy customers as well.